Hello, I'm Charles Boettcher, Managing Director and Senior Portfolio Manager at City National Rockdale. Welcome to Market Perspectives. Equity markets have hit new highs this month. August marked the fourth straight month of gains for the S&P 500, and with about a week to go, it appears September will make it 5 straight. Month to date, the S&P 500 is up over 3%. For the quarter, it's up over 8%, bringing the year-to-date return to almost 15%. Growth stocks have now outpaced value stocks year to date, and the familiar sectors, communication services and information technology, are leading the way. So in this manner, 2025 is starting to look a lot like 2024. The bottom two charts illustrate how similar the various areas of U.S. stocks have performed. Larger cap stocks are ahead of mid and small cap stocks, and the tech and AI focused Magnificent Seven are leading the way. Again. The caption is apropos, as well as a nod to The Who as they perform their farewell tour. What's driving the strength, and can it sustain for the remainder of the year and into 2026? Well, earnings have certainly helped. Earnings season has been strong, with companies like Broadcom, Microsoft, and Google reporting significant growth. The past 7 quarters have been above the 5-year pre-COVID average. Shift your focus to the right to see that net income margins have been solid. In addition to earnings and margins, the second quarter revenue growth rate was above 6% for the S&P 500 companies in aggregate. And consensus estimates are for growth to continue. Business sentiment has improved and optimism among CEOs is rebounding with many of the trade deals behind us. Second quarter revenue growth was good and growth rates are expected to continue growing. With expectations for continued sales growth, business spending is estimated to grow as well. Corporate financials should benefit. Looking forward, there are some questions about the market's valuation, largely elevated by the Magnificent Seven, and the ability for AI to push those related stocks and sectors further upwards. Or, put another way, is the AI run creating a bubble? How much longer can the Magnificent Seven drive returns? We are starting to see broad-based incorporation of AI across industries. As productivity gains from AI begin to materialize, there will be compelling long-term investment opportunities across a variety of sectors, not just technology, but utilities and real estate, for example. Technology and professional services are adopting AI the fastest, with 71% of firms now using generative AI in at least one business function. Infrastructure spending is likely to continue, and recent strong revenues from the Magnificent Seven justify the spending. Second quarter Magnificent Seven revenues totaled over $500 billion, and growth rates are expected to continue. In addition to supportive revenue and earnings growth, the new budget, reduced regulations, and increased corporate investment are expected to drive stronger growth in 2026. Further, we just got our first Fed funds rate cut for 2025, and likely not the last. The current monetary policy path is supportive for further growth. The economy is in a slowdown mode, not a contraction. Consumer and business confidence have stabilized and is rebounding from earlier lows. So, reasons to be optimistic for the remainder of the year and into 2026. I'm Charles Boettcher with Market Perspectives. Take care.